It's Thursday. That means it's Legacy Thursday. Let's take a look at some legacy charts. Let's start with a new entrant, Coin. The Coinbase direct listing went live on Wednesday US time, opening at 1:30 p.m. EST. Bit bizarre how the whole process ended up working out, but it's now traded for a full day and a half. And let's put some TA on this sucker. Why not? Right? That's why we're here. Love Coinbase or hate Coinbase for any number of reasons. You can't ignore what they've done for crypto, at least more so in the earlier years than the later years, but they brought a lot of people into the fold. They legitimized crypto in a big way. I mean, I started on Coinbase buying my first crypto back in 2013, specifically Bitcoin. They didn't really have much else at that point in time. So collectively, the whole experience was a great proxy for, altcoin trading non-crypto stuff, watching VCs dump all over, everybody buying in early, not that much trading history yet, obviously. So this is the 3-minute chart, but there is a bull div on the 3-minute. It is below a ton of volume resistance up here. So if I was actually trading this, I bought some at 338. Just full disclosure, I have 3 shares at 338. Because why not, right? I had to. It's a buy and hold. I'm a Coinbase community member now. What can I say? But anyway, so above 333, based on volume, is where this may have some upthrust. I don't know. But it's interesting to watch it all play out over time. It's like a new coin listing, except it's, Coinbase, right? Looking at the usual legacy stuff, the VIX, the volatility index, the fear index continues to decline. If it's declining, we're bullish. If it's rising, we're bearish. If it's above 20, we are bearish. If it's below 10, we are bullish. It's well on its way down as more and more people get vaccinated, as most of the corona stuff around the United States anyway is calming down. So that's what you like to see if you are bullish here. Now, if you're bearish, if you think we're toppy, you want the VIX to climb back up to 60, 80, whatever it was, right? DXY correlation, 30-week rolling correlation, has gone increasingly positive over the past few weeks, basically since January. That was kind of the low for the DXY. So if the DXY is bullish and you're bullish crypto, you want a positive correlation, obviously. And the opposite is true with the XAU gold. You want a negative correlation if gold is declining and crypto is bullish, right? These aren't necessarily leading, they're more lagging than anything, but they can help sentiment. If Dixie's all of a sudden super bullish and there's a negative correlation, then I start to get concerned, right? With crypto, that we're in price discovery. Is Dixie rising more of a macro proxy for everything else going on, right? It's not just, the DXY is rising. It's what does that mean around the world? What's happening? Are rates going up? Is it a risk-off environment? That sort of thing. I'm looking at SPX and NASDAQ. We still are screaming more so with SPX now than NASDAQ, but SPX correlation is near 100%. It's basically at the highest ever. Gold, by the way, second lowest negative correlation ever. So second highest negative correlation ever, basically since 2013. So for instance, if the SPX sells off like it did in March, NASDAQ sells off like it did in March, crypto's going to feel that directly, immediately. This isn't going to act alone. If anything, this represents a risk-on environment if we are correlated with legacy stuff, stocks, that sort of thing. Looking at the DXY directly, for weeks and weeks and weeks, I've been talking about this 200-day moving average, basically mean reverted, got denied, we're below it again. So it's certainly more bullish than bearish based on just trend metric principles. Ultimately, though, seeing Dixie drop below 89 is the dream for crypto, because that just means dollars being devalued further, multi-year devaluation, I guess you could say. And that's more and more bullish for crypto. I saw an article today about another stimulus potentially in the works. So that may or may not be priced in at this point, right? But let's say it isn't. And if it's not, Dixie will take a massive hit and crypto stocks will probably continue their rapid ascent. Looking at gold, it had an incredible run in 2019, 2020. And then sort of mid-2020 just sold way off. It's in the weekly cloud now, which in general, if I just turn on a chart and I see this, it says no trade zone. I don't want to touch it. If I get the opportunity to short this, what I'm looking for is a bearish TK cross with price inside of the cloud. Ideally, the closest to this edge possible. So if this can pull up, TK crosses bearish, maybe it's somewhere in 1780 land, 1800. Now maybe that's a good short entry. Otherwise, you're looking for bullish continuation if you get a TK cross recross. It can get messy like it did in here. So you had your edge to edge entry with the bearish TK cross, and it didn't actually go anywhere. Popped way back up. The signals get completely out of whack and useless, right? Because it's telling you to go short here. This is the target. You get stopped out. It's telling you to long here, expecting bullish continuation. It doesn't. The edge to edge triggers then at that point. So that's a great proxy for what may happen here. Just a bunch of noise, right? So I'm not actively trading that, but if I were, that's the kind of thing I'd be looking out for. SPX, I mean, does the chart even matter at this point? It just, it's so comically insane. It's like a cartoon character just bouncing higher, right? We're printing money, inflation is higher than expected, blah, 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 all these things. And S&P's just absolutely roofing. Mean reversion, what's that? Don't care. You know, reality is completely divorced from this entirely in certain respects. Now, not necessarily based on inflation and money printing, but much of the country, the US, isn't doing so hot, whereas, 20% of the country is doing great, right? NASDAQ, very similar, just back to all-time highs, never really had a chance to mean revert, absolutely ready for more by the looks of it, even though I wouldn't actively trade this. I'd be scared to death longing up here, both of these charts, based on potential mean reversion. GME on the hourly cloud looks bearish, continues to look bearish. It's got this inverted Adam and Eve quality to it, inverted cup and handle quality to it. I wouldn't want to touch this until it's back above the hourly cloud at a minimum. AMC also below the hourly cloud, but looking like it's gathering some steam. Potential head and shoulders here. Popping on VPVR, if it can get above 10 psychological resistance, looks like it wants 14. But if I was trading this, that would definitely be a wait and see for me. BBBY got hammered. It is a consumer goods retailer, I guess you'd call it. Here's a more blatant inverted Adam and Eve, and it looks like it wants to revisit the 20 zone. So definitely more of a reality check for BBBY than AMC or GME. GME is the memeiest of them all. AMC a little less so, and then BBBY had that meme effect, but for the most part has returned to reality as far as prices are concerned. MSTR, moving on to stocks with BTC on their balance sheet. I've been watching this $800 zone, and it got denied this week again. Maybe an Adam and Eve, maybe a inverted head and shoulders hangover. It looks trendless right now. It doesn't look like, Square, right? Square very clearly had a mixture of inverted head and shoulders and Adam and Eve, or W double bottom, whatever you want to call it, right? It looks like it wants higher. Just taking a measured move, I like 293, which probably would be all-time highs for Square. Tesla, I like 830, very similar picture. A mix of Adam, Eve, and inverted head and shoulder stuff. Collectively bullish reversal type patterns. It's in this divot of volume as well. Path of least resistance is up at this point for Tesla. GBTC continues to hold basically a 10% discount. Just multiply this by 1,000, and you get your BTC price versus spot. Volume still declining. It hasn't really broken out of its ascending triangle, unlike spot has. So it's kind of dwindling versus spot more and more, as BTC's at 60, 63 something and change right now. So it's even more than 10% off spot. So it's getting a little scary for GBTC. ETH, not at all-time highs yet based on ETH. It's also 10% below spot or more at this point. Tons and tons of volume came in here at the beginning of the year. You can see it was a new animal when they opened the fund. Redemptions is the wrong word, but they opened up the fund again in January, I believe, which is where all this volume was coming from. So there were lots of buyers and sellers in this region. So path of least resistance is definitely bullish continuation there. BTC 1 exclamation point. The CME futures BTC pair is more in line with spot prices. It's above its ascending triangle horizontal resistance. It's got a slight premium over spot. A little bit of volume up here as well if, sells off or whatever, but targets are similar to spot, 66K to 71K. And then lastly, looking at the ETH CME futures, it's also got a slight premium relative to spot. It doesn't have a lot of trading data, obviously, but something to watch for just as a proxy of legacy and institutional demand for BTC and ETH relative to spot prices. That's all I have for this one. Like, comment, share, subscribe. Let me know if you have any questions in the comments below, and happy trading.